Welcome, dear traders. This is the latest review of the US stock market by InstaForex Group. The end of this week is set to be just as volatile as the previous 3 days in November. Today's events, such as the US unemployment data, non-farm payrolls, corporate earnings reports, and the optimistic news from China, will influence traders today. As forecasted earlier, the US stock market declined once again on Thursday. Tech stocks suffered by biggest losses as the market participants digested the Federal Reserve's plans. Grim outlooks by chip manufacturers also negatively affected the sector. Indexes finished Thursday in a negative territory. The Dow Jones Industrial Average decreased by 0.46%, while the Nasdaq closed 1.73%. The S&P declined by 1.06% and closed at 3,719 points. Pre-market trading on Friday was more optimistic as all three major indexes recovered strongly and posted gains from 0.9% to 2.1%. The S&P is expected to trade in the intraday corridor between 3,710 and 3,840 points on the final trading day of the week. During Thursday's session, large-cap stocks were severely impacted by the US dollar rally and the renewed rise of US Treasury bond yields. Apple and Alphabet both declined by more than 4%. The telecommunications sector suffered the biggest losses, with Qualcomm and Roku falling by 7.66% and 4.57% respectively due to their weak outlooks for the fourth quarter. On the Dow Jones Industrial Average, shares of Boeing and Caterpillar advanced by 6% and 2% respectively. These gains helped the index avoid heavy losses. According to Refinitiv, about 80% of companies on the S&P have already released their earnings reports, and the expected growth rate now stands at 4.7%, slightly higher than the increase of 4.5% expected in early October. The number of initial jobless claims in the United States has decreased, the latest data by the US Labor Department said, which indicates that the labor market remains strong. The Federal Reserve is now more likely to continue its aggressive monetary tightening. The latest news from China has sparked optimism among market participants. According to reports, China might ease some of its strict quarantine policies in the future. Earlier this week, rumors on China's social media claimed that the lockdowns will be fully lifted in March 2023. Although these rumors will quickly dismissed, investors still hope for a reopening of the Chinese economy, despite the rising number of COVID-19 cases. In corporate news, Warner Bros. Discovery reported a loss in the third quarter, and the company's earnings fell short of Wall Street expectations due to the restructuring of the combined media company. However, investor concerns were alleviated by reports that HBO's fantasy series The House of the Dragon became the streaming service's most watched series premiere. Shares of Warner decreased by 4.8% in after-hours trading due to the disappointing earnings report, and the company posted a loss of $2.3 billion or 95 cents per share, greatly above the per-share loss of 21 cents expected by analysts. The revenue of the streaming business, which combined HBO Max and Discovery Plus, fell by 6% to $2.3 billion. However, today's corporate reports are overshadowed by the US labor market data. Although the latest reports are mixed, there is still a cause for optimism. In October, the unemployment rate in the United States finally increased by 0.2% to 3.7% from the 29-month low of 3.6% it hit in September. Market participants expected unemployment to reach 3.6%. Unemployment has remained in a a very narrow range of 3.5% and 3.7% since March, indicating that the US labor market remains extremely tight. Still, October's increase gave hope to the US stock market that inflationary pressures will ease and that the Fed will reconsider its monetary policy. In October, the American economy added 261,000 jobs, above the market forecast of 200,000. Although these are the weakest figures since December 2020, the results continue to point to a strong, albeit slowing job market as worker shortages continue. Signs of cooling in the jobs market have harmed the US dollar. It spent the whole day feeling pressure from growing optimism in the Asian and the European markets as well as the commodity market. USDX fell by 0.8% to 112 points. It's seen to be moving in the range between 110.80 and 111.90 today. Despite the upbeat non-farm payrolls data, the unemployment rate in the United States came in at 3.7%, slightly above market expectations, contributing to a drop in the dollar. Additional pressure on the dollar index came from a straggling rally in the oil quotes. Crude prices soared by more than 4%, driving commodity currencies up along the way, with the Aussie dollar and the Kiwi trading under stronger selling pressure. Still, probably the dollar index maintains its growth prospects. The Fed remains hawkish. The jobs market is still tight and inflation data is looming. However, the greenback may still encounter support in the medium term. Today, these are support and resistance that could prevent a fall in the dollar index rather than macro data. Meanwhile, USD CAD lost 1.5% intraday, following a plunge in the dollar and a rally in crude quartz. Today, the pair is seen to be trading in the range between 1.3460 and 1.3570. Canada's fresh labor market statistics are also seen as the driving force for the USD CAD pair today. The latest update figures illustrate the strength of the labor market. This could urge the Bank of Canada to get back to its aggressive monetary stance. In October, the Canadian economy added 108,300 jobs, the most since February and way more than expectations of 10,000. Employment rose in several industries led by manufacturing, construction, as well as accommodation and the food services. Still, it fell in a wholesale and retail trade as well as in natural resources. Above all else, the Canadian economy is strong and resilient. Canada's Finance Ministry said on Thursday that the deficit for this fiscal year would be 36.4 billion Canadian dollars, down more than 30% from deficit in April. The government also slashed its 2023 real GDP forecast to 0.7% from 3.1% in April, although it said the economy would avoid a recession in its baseline scenario. The euphoria over the fall in the dollar is felt in the cryptocurrency market today, fueled by the optimism that gripped the Asian market in the morning. Digital assets literally rushed to conquer old highs after the release of the labor market report. Bitcoin added 2.2% and finally jumped above the $20,600 level, getting close to the next important high of $20,800. At the same time, Ether added 4.9%, while Solana, Ripple and Litecoin posted gains of 4 or 8.5%. The long-awaited rally in the crypto market may start by the close of Friday trading. Perhaps today we will see Bitcoin breaking above $21,200. True, such an increase will become possible if the digital asset encounters no resistance at the $20,800 high. The daily range for the BTC stands between $20,400 and $21,500. This is how our analysts see the situation on the market at the end of the trading week. Although there is every reason to go long now, you should not forget about the resistance on the path of each asset. Even if the rally ends with a pullback and volatility rises, we hope you will still find a way to make a profit. InstaForex team wishes you the best of luck. Until next time, see you on Monday.